Hello, Warriors. How's everyone doing today? Marcus, Ran, don't write me in. Too many skeletons, Brand. Glenn, how are you? Kman, happy Halloween. Boo. Are you scared?
Yeah.
Anyways, Sinatra, AJ, Hugo, uh, guys, being part of a team is really fantastic. I'm back on Twitter because of my teammates and friends, especially Leandro, and he spent a lot of time doing this to help me out. I'd still be off line if it was up to me. I,
You and I,
you know,
Dale, you and
I
I.
wouldn't know what the heck to do. Anyway, once in a while, I do know what to do with this stuff, like draw lines. It still amazes me when lines are respected. This is a throwover line that was respected last night. 52 was my number for us to get back inside of this formation, and maybe that's going to happen. Uh, it, you might want to consider selling rallies at 53, but the NFP is tomorrow.
Mm.
But that it looks like that's top. The three drive formations, you're in profits from taking this signal. Oh, that's a 2 hour. So I take them off of four. So, this was the candle after the third drive. So you have a little lead on it on that. And what's the 10-year doing? Not as much in the 10-year, but still a failing rally here. So uh, BOJ coming up here.
Yeah, well,
Eh,
we had it as expected. They didn't move anything. But
Okay.
Ueda was relatively hawkish in the fact that he said that where there was uncertainty or them needing to be patient to move on with the rates, that he was hopeful that that line he would not have to use it anymore, and that's what dragged dollar yen down to 152. But again, we're seeing those deep buyers stepping in there.
Yeah.
Because the real action isn't there. And also, what I think what made this move a bit short-lived, that move down there, is he was pushing the responsibility a bit to the US. He said like the reason one of the, or at least the main reason why they used this line to be cautious on further rate hikes was because they saw signs of the US job market cooling down. And if you want to rely on somebody else to tell you what to do, that's maybe where the market went like, hang on a bit, do we really want to be long yen just on because he said that?
Yeah.
That's why I think we're still in this range. We see the deep buyers, and also we are ahead of such a big event that
Yeah.
anything people have in position now, they probably, if they see 50, 60, 70 pips or 100 pips, they want to take at least a fair bit off, because it's just the risk is too big for carrying
Right.
anything into next week. Huh?
Yeah, that's a great point. Election risk.
Yeah.
Euro, really stood out yesterday. Oh, there's another line I have that it's respecting here. Um,
Yeah.
Not sure what it is, but you
It's a
know,
line
uh,
and it's blue.
yeah, it's a blue line on Halloween that so far it's rejecting. But if the Wolf Man comes into Europe, I
Mm-hmm.
think the euro will try and break through this wall, just
Yeah.
running away from all the goblins that
Mm.
are trying to chase him in Europe and say that it's a failed experiment and that it's going to fall apart and because it's not a federal union. It's only a monetary union. How
It's
many years have you heard that? It can't
and
work.
and and
Yeah.
Wolf is a German name, so when it
Oh,
goes a bit better in Germany, the euro does better as well.
all right. So, what do you think, though? I'm
Yeah, I
thinking
think.
950,
Um,
10.
oh, well, we are month end as well, and
Okay.
there
Yeah.
there were like hints going around that people needed to buy euros. That may have to do with it. But I think the best thing, well, the best that can happen to the euro is Germany to stand up, right? And we're seeing
Yeah,
green shoots over there. So that has to do because if it's not only euro dollar, if you look at euro crosses, they're all relatively big. And I think that has to do with the one of the main engines doing pretty well. So then you have month end, and then you have, and also I think Dale, what I've also said on the shows, on the flow show, is that I pleased to think, or I'd rather think that the bulk of the preparation, the bulk, I'm not saying everything, and there's always going to be a big reaction, but the bulk of the preparation for the Trump version 2 may be behind us. So stuff is correcting. Some things are correcting, and I think that is eating pot of everything. And yeah, and that people were selling euros right for a while, and now they you don't want to have like your full positions going into the event next week. And we still have the jobs report in between as well.
yeah,
So
yeah,
it's all kind of following some sort of scenario. Front runners, then they buy some back, and is the euro out of the woods? Who knows? Next set of German data may be crappy again, and then we trade 106. Who knows? But
yeah.
yeah, I
Well,
think right
it
now,
is up with risk off, pretty good risk off happening here.
mm,
57.90.
yeah,
Look at what that's holding.
yeah.
I've been saying the 5% correction since, back in here. Um, so, that could take it down to about 56.70 or so.
Mm.
And then, maybe that's into the election or
And
before
that's
the
all,
election.
yeah. And that's
That's all
also,
I'm looking for.
and I think that's also part of the part of this big melting pot. You do you want to keep full whack long whatever, or full whack short whatever going into those elections, and because there's always a risk, and that's what we're seeing as well. By the way, I mean, people expecting dollar pretty decent dollar sales on the month, and that's what the models were saying. On the other hand, if you see setbacks in the equity markets, that signal may have diminished. So we
Yeah.
need to be a tad careful.
So what we're seeing, and it even started with DJT, is people booking the Trump trade, right?
Yeah.
Dollar coming off,
Hmm.
DJT coming off, yields, TLT looks like it's trying to bottom. So that's what people are doing. Can you imagine if he doesn't win, what a crash this will be in DJT? Uh, you know, be a big crash because this
Is
was
that like the
mainly.
famous oil the other year that we had? Can Trump technology go negative?
Oh yeah. So yeah, anyway, that's uh part of the trade, predicting the Trump victory. Now it's profit taking.
Hmm.
I don't know, Blake, are the betting polls shifting a little bit with what's happening here, where, you don't have the same um
I
divergence.
mean,
Are they starting to converge a little bit?
I mean, like it's like I mean, a little downtick, but hasn't changed a lot.
Okay.
Yeah, I
Okay.
wouldn't say it's anything of significance. But how about this? A lower high, you know?
Yeah.
Here,
Okay.
I
Go
mean, I
ahead.
can show you. Yeah.
Yeah,
So,
yeah.
I
But
mean,
anyway,
DJT, here's the thing. I mean, if you're and I think you're exactly right. If Trump is not reelected, DJT is probably going to zero. I mean, zero is maybe a bit of an exaggeration, but it's probably going to fall quite precipitously. I would assume
yeah,
it could literally go to zero. I mean, that's entirely possible. But I don't think that's going
yeah,
to happen. I'm just saying, I think that would be. But there's your look. See, Dale. Whoops,
yeah.
there's your
You
tick
got
down
a
right there.
little tail
Lower high,
coming. Yeah. Oh,
lower
okay.
high, lower high.
Oh,
Yeah,
okay.
but I was pulling this up for everybody in the Forex Analytics community, and this is a good because I had a lot of Europeans asking yesterday, what a good website to just look at, you know, polling, and I think 55-38, Nate Silver's, it's pretty, you know, I believe unbiased, and you can see that. I mean, this is just talking about that, you know, look how narrow it is. I know the betting polls have Trump, you know, victorious, but and well in the head, well ahead. But you know, you look at other polls, and you know, I think it's still a very, very tight race, and and I wouldn't be surprised if some of those betting polls tighten up a little bit as we head into the actual election here over the weekend. So, if that's why you got to be a little bit more careful. I'm going to show you just a couple of things, and then we can stop talking about the elections. I think tomorrow, we'll put together some thoughts, you know, ahead of the weekend. I think it'll be a good time to really talk about it. But I want to show you just a couple of things that have my attention regarding the election. The US dollar Mexican peso, we stopped at basically at 2024 highs, right? So you can see how we basically hit that high and reverse. Now, I am still looking at a, you know, A, B, C, D equal leg move if we break out, but we haven't broken out yet. And there's something else that hasn't broken out. You haven't seen Bitcoin break out. I mean, Bitcoin is at challenging, just like the dollar mex. Bitcoin is challenging the all-time highs, but we haven't made new all-time highs, you know. So, you know, here we are basically challenging the all-time highs, but we haven't broken them. So those are just like little things that, you know, the market's going, wait a second, you know. I know Dale, sorry, Kman, you were just talking about, like, you know, people coming into the election too short euro, you know, when you know, Germany's data looked a little bit better overnight, and the data sets are really over the last couple of days have looked a little bit better. And so people are probably paring back some of their dollar longs, you know, that's a Trump trade. And then, you know, you see it here in Bitcoin and peso. And I'm not saying they can't still, you know, trip stops above these highs, but, you know, you are seeing some hesitation because you got the betting markets going really far in one direction, but you got, you know, other national polls that are like, hey, it's still a really tight race. So, you know, I think, and I'm just going to say this out loud to you guys. I think one of the best trades, you know, following the election, especially on a Trump victory, is going to be a dollar CAD long. I think the dollar CAD goes from 140 to 144 to 45 in very short order. Like you can see, we're basically stopping here, and this is, I guess, is another Trump trade too. We stopped here at 139.50. Now we do have Canadian GDP coming out in 17 minutes, and I don't think we're breaking 139.50 to 140 ahead of the election. But post-election,
Yep.
So if you get a pullback to 137 to 136, you got to be on it.
Oh, there's no freaking way in hell on hell's green earth, God's green earth, hell's scorched earth. There we go. It's too early in the morning, Dale. There's no way we're getting to 137 ahead of the election. No freaking way. I would be, and you're talking to somebody who's actually short some dollar CAD. I'm actually short a little bit here. I would be very, very happy on a move just down to like 138 and change. I don't think we're going all the way down there. If we did go all the way down to 137 ahead of Monday, that would be awesome. There's no way.
Yeah.
Well, I don't know. I guess we got
everything can
payroll
happen
tomorrow.
Not ahead of the elections.
Yeah, it's at end of month. That seems like a little aggressive to me to see that much dollar selling come in ahead of the election, unless something crazy happened in the polls
or a weak number tomorrow.
Yeah, I mean,
we're set up.
It'd have to be a weak number, but I'm gonna go with what Steve had to say yesterday, and you know, what's the likelihood that you're going to get a miserable number tomorrow, a day before the elections, or a week, a couple of days before the election? You're not going to see us lose 200,000 jobs tomorrow. I can guarantee you that, you know, and I can't guarantee much, but there's no way the Biden administration is going to let that happen. So we are supposed to create 111,000 jobs. Maybe worst case scenario, we create 80,000 jobs. You know, maybe. You know, I'm probably
Well,
being a
there's a
little.
lot of noise because of the hurricane, and Ryan was saying the holiday hiring.
There's a lot of
Um,
noise. There's a lot
yeah,
of noise, but there's a lot of
Florida.
political pressure to
Yeah,
make sure that that data is not super bad. Let's just throw out another revision and have the next administration deal with it. So
yeah,
throw out a revision for next year. So, you know what I mean? So that's
yeah.
just I mean,
Could
again,
be right.
I'm just thinking about the dollar and how big of a correction can we get? I don't know. But just looking at this dollar CAD, really key support's going to be here at 138.80. That's our channel support. Um, and the other thing that I want to point out, just a few things about the dollar. I mean, you look at the euro's starting to firm up. I got out of my euro longs yesterday. I was long quite a bit at around the 108.10 level, and I got out as we hit the top of this resistance zone. But I mean, good economic data. What do you make about that data this morning, Kman?
The challengers jobs.
Yeah, no, like all the German data. I mean, that was
Oh, it
in
shoots,
this
shoots,
in Eurozone CPI came out.
shoots. Well, the Eurozone CPI was quite expected, although it just like a tenth or so overshot, but that was within the expectations. It's the German green shoots that people are relying on. But as I said, it's like a melting pot of everything.
Yeah.
You see the dollar losing a bit of steam at the same time risk is coming a little bit off, so that's another a tailwind for euro versus stuff like commodity currencies, for instance. Look at all the euro crosses, they are trading around their highs of the day. Well, euro yen is a different animal, but look at even euro Swiss is through 94. Yeah, so I mean there's a bit of a tailwind there for the euro. And you know what? I think it's all part of that. Yeah, that big thing where the market was a bit too short euros, and now they want or they need to buy back a few, and but it's not completely out of the woods. And again, I mean, imagine what happens next week, and it's. But I think to close the month, I think euro really closes on a positive note the month. Yeah.
Yeah, and look, this I believe, and this is going to be a really great opportunity because this is you can clearly see, and this is something that I believe, and many people that have been following me for the last couple of decades know I say this all the time. Before a big major event, which obviously November 5th is going to be a major event, if not one of the biggest ones of the year in the dollar. We usually go about mid-range, and if I had to guess where mid-range is in the euro dollar, it's close to where we're at, probably around the 109, because clearly you can see this move above 110 would be where the euro turns really bullish. And again, I'm going to go back to the elections and just say, on a Harris win, the dollar's probably going to come under a lot of pressure, and we're going to see the euro back above 110 and probably on its way towards 113, maybe even 114. The flip side is if Donald Trump wins, here we are around 109. I think that's where we're going to end up being. We'll probably be within about 30 or 40 pips of where we are at right now. Whether we go a little higher than lower or a little lower than higher, we're going to be in the middle of this range, and then a break below this major multi-year trend line support is going to be the breakdown point for the euro. So I believe we're going to be right in this range going into November 5th. Whenever the market needs to get itself back to break even and kind of back to square positioning, it's finding a mid-range within the breakout points, and I think those are the breakout points going into the election next week. So that's what I think. And once again, because of non-farm payroll, yes, we could do this and then this, or we could do this and then this. I think either one is quite doable. But I think this is the range that we play in. Dale, you have any thoughts here? Anything that you want to add?
You know, I'm just thinking that we get this rally to 110,
Yeah.
and then I'm looking for 103, 102. So you know, I have targets up around 109 before it's over in Dixie. So, but I'm looking for a pullback to 102. I think that's good. I think you have to fade dollar weakness if we get it. I think we are
Yeah.
going to get it.
Yeah, and you
So,
know where and this is like going back into next week. If we do get, you know, a Kamala Harris win, and let's just I know most of us don't believe that's going to happen, but let's just say it does, because you got to think about what happens after the fact. I think that the dollar comes under a lot of pressure. We see the dollar index really dip, and then you have to be ready to buy that because you know the election will be contested, and you know that when the markets will get nervous after about, I would say probably about a week of not knowing. So if we go a week, we extend a week of not knowing who the next president of the United States is going to be, the market's going to go into convulsions, and that is going to result in dollar strength. So if the dollar does sell off because Harris win, and a week later the markets are starting to feel a little jitters, I think you have to turn around and just buy the dollar. So that's kind of where I'm standing, and what I'm thinking. Anyway, we'll probably end up talking about this for the next several days. So let's kind of
Several months.
yeah, and yeah, hopefully not, Kman.
If it's Trump, we're going to be talking about it for 4 years.
Yeah, you know, and this is something I want to talk to everybody and kind of prepare them for what's coming if there is a Trump presidency. For those of you that haven't traded through one, when I was when Trump was a president previously, I was doing prop trading for Gallows Capital and Spectrum Capital Management ahead of that. And what I learned is you can't I'm going to become more of a day trader over the next 4 years. If he is, I can't tell you how many times I've been in big positions swinging, you know, like, hey, I'm going to buy the euro and sit in it for a couple of days. And then, you know, it'll be 11 o'clock at night, or, you know, and I could just see him, you know, sitting on, you know, and
yeah,
on
tweet.
probably,
Yeah.
he's probably sitting on the toilet seat at like midnight, just tweeting out something crazy. And then next thing you know, whatever position I was in, I'm stopping what I'm doing. I pull the car over. I was, you know, in the middle of a run or a walk, and I have to turn around and get out of all my positions and take losses. That type of volatility is a reality if or when he becomes president again. So I'm going to give you all just a little suggestion: is be really careful swinging anything over the course of the next 4 years if that's the case. I don't know if you experienced that like quite like I did, Kman. Maybe it was just more exaggerated because I was trading such big positions. I would have like, you know, I'd have anywhere from $2 to, you know, $5 million worth of euro on. So you know, yeah, I could be sitting there, you know, up 10, 20 grand. Next thing you know, I'm down 30 grand. It was like literally within, you know, less than 10
Well,
minutes. I mean,
there are cartoons about it, Blake. It shows, I remember it shows Trump sitting at a desk and having almost like a trader's workstation on his desk. And he's has one hand on the button and the other one's on the phone. And he's talking about, well, in 10 minutes, I'm going to announce new tariffs.
yeah,
All right.
yeah.
Okay. You know, so anyway, so obviously you're not the only one that experienced that. The
Yeah,
guy who made the cartoon. Yeah.
it's crazy. Hey, we're a couple minutes from data. I wanted to also point out. I want to ask actually, Kman, since you know,
You,
this sterling trading a little
yes,
heavier following the UK budget. What
it
really
is.
stuck out to you other than, you know, some of the taxation, the less taxes you're going to have in the pubs? I mean, what else really stood out about the UK budget for you yesterday?
More to borrow, more national insurance contributions, a lot of pressure on some companies. I don't like it. I think it's full of risks. And Reeves tried to scramble back a little bit this morning saying that it would be the only time that she would ask for money. She won't ask for more money in the spring budget, but that's been laughed away. I don't. It comprises a lot of risks for the sterling, in my opinion. As I said on the flow show, it may be a bit early, and the sterling could in a way get away with another week and a half over the elections, because the rest of the world is going to go in a virtual standstill, perhaps, during the US elections, because it's such a big thing. But I'm really not optimistic for the sterling after what she announced yesterday.
I was talking to a gentleman by the name of Biot or
Payout.
Beat. Yeah, Biot.
Yeah.
Well, he goes by Beat Newsbauer, and he's been a friend over the last few years that I've interviewed. He used to work for Goldman, and he trades FX and good macro guy. I was talking to him yesterday about that, and he was like, "Yeah, I'm just not. I'm like he'd been holding sterling shorts for like the last couple of months." And I'm like, after listening to him and, he was breaking everything down. And I'm like, I am going to I think I want to position myself a little, short some sterling. And I did. And I did it in the euro sterling yesterday,
Yeah, me
because
too.
we broke this descending trend line. Yesterday we were trading right at 83.50. So now I'm on the long side of this, and I'm actually want to get a little bit more long, because as you pointed out, the German data looks better, and if people resonate or they let this sit on this UK budget, they're probably just going to weigh on sterling a little bit more. Are
I
you
think
long
it's yeah.
euro sterling too?
I bought euro sterling, yeah.
Oh yeah.
Yeah, and because I want to steer away from the dollar, and because if you can have such a violent moves next week that you just can't, whatever position you have in the dollar, you can get taken out, and because it's depending on the one or the other outcome, or even one outcome can give you such a big saloon doors that whatever position you're carrying the dollar next week, you can get taken out.
Yeah,
So I'd rather steer away from the dollar, but
exactly.
I received an email this morning, and I was talking about it. We're chatting about it in the Flownomics room. I received an email, since I'm a very tiny company owner, but if I were a bigger company owner, receiving that email from the Her Majesty's whatever thing, according to the budget, I would leave the country, really, because
Yeah.
there's a risk, in the budget here, because she lowered the threshold for paying increased national insurance contributions. So they lowered the threshold for when a company would start to pay national insurance contributions for their workers to a ridiculous £5,000. And I think there's a real risk there for companies starting to lower wages in the UK. And if that would happen, then it's not looking good. Not looking good
Yeah.
at all, I think, for the sterling.
All right. Well, if you guys want to know where we're trading and what we're trading, like this is when I picked up the euro sterling yesterday at 83.47. Closed all my euro longs yesterday. I picked up dollar Mexican peso long this morning. And if you want to know all that information, jump in the ForexAnalytix chat room, just in the trades room. It'll just give you an idea of what Kman and I are doing, and shows where he's long euro sterling as well. This is where you're going to want to be when on election night. And remember, it's $1 for 10 days to try out ForexAnalytix, and then you can be inside our community with myself, Kman, Ryan, a bunch of other really great traders on election night. And that's you're going to want to not want to deal with all the Twitter shit. You're just going to want to be in a community where you're talking about, hey, what markets are moving. That's where you're going to want to be. Twitter is too convoluted, and it's a bunch of misinformation and shit. You want to be where other traders are at. Anyway, hey, we got to get set up for the data. Let me go ahead and get this ready for you. Kman, how much time do I got?
26.
20 seconds. Okay, hold on. Remember, we have a lot of economic data coming out right now. So weekly unemployment claims, ECI, and PCE, and Canadian job, or a Canadian GDP, excuse me. So let's get that out of the way.
Here we go. 5 seconds.
Look at all this data.
Flat GDP.
Canadian GDP worse than expected. Wow.
Yeah, but that's the prior one. It's not the September one.
Oh, that was a
Jobs
month.
okay. Employment cost index ticking a little bit lower, just a little bit. Yeah. Spending
PCE, a little weaker.
okay.
Month over month higher.
Yeah, the prices are a bit same as last month. Spending okay-ish.
Look at the hey, look at the jobless claims are better than expected. Who would have thought that? No way.
Yeah, Canadian GDP for September also flat. I mean, this in Canada everything is flat. All right, guys, I'm going to update the data. See you tomorrow.
Thank you, Kman. And guys, I just want to say that tomorrow's jobs report, it's going to be a big deal tomorrow. It's going to be the liquidity is getting really poor. And it's going to continue to get really poor for the next couple of days. And there's going to be that position squaring. Think about this when you're talking about the euro. I want to just go back really fast and just say this before Dale takes over with his guest. This is the range for the euro. Everybody's squaring up ahead of the election. Breakout points are going to be 110 and 107.50 basically. Break below 107.50 is extremely bullish the dollar. A break above 110 is going to be extremely bearish the dollar. We're not going to know which direction we're going until after hopefully November, probably November 6th, in the middle of the night or in the early morning hours, and then maybe not even for a few days after that. So that's how I'm looking at the market. And remember, tomorrow we're going to be live here for non-farm payroll. Get in your NFP guesses. Remember, you'll get a free 30 days of ForexAnalytix if you guess the non-farm payroll right. We give three memberships away, subscriptions away every damn month. So make sure you guys enter to win. You can't win if you don't enter, and it's free to enter. So just make your best guess. Dale?
Okay. So
I can't wait to see you on Twitter, buddy.
I tweeted.
You did?
Yeah, I put a tweet out to thank the team.
Oh,
for
look
recovering
at you,
the
man.
account, and so it's good to be back there. I have all these messages. I don't know, probably thousands of messages of spam from when it was not in our hands. Anyway, it's good to be back on Twitter, and thank you, team. And definitely, team is what we have here at ForexAnalytix. So, I do encourage people to be in the chat room on election night and, be the closest thing to being on the floor, being around. There's a reason why they had trading floors so that people could, work together and execute and share ideas. And since there really aren't any trading floors, chat has replaced that, especially if you have great traders in there that are willing to share their ideas and help you out. So I know that's the case in ForexAnalytix. So trade the election, check it out, and for $1 you'll be there. And I'm glad to be able to see Kirk Spano. Thank you, team. Thanks, Kay. I don't know if you're leaving today or tomorrow. Tomorrow, so you'll be here tomorrow?
Yep, I'll be there.
Oh, okay. Then
Have a great interview.
I'll save my teary-eyed goodbye for tomorrow. And Kirk, how have you been? It's good to see you.
I've been good. How are you?
Doing all right, buddy. So why don't we get the elephant in the room, which is the symbol for the Republican Party, right? The elephant. Isn't that it? And the donkey for
that is the elephant. I actually have a tie clip with one of those from my great grandfather. He was a Republican back in the day.
All right. Well,
I don't think he'd be a Republican now.
You don't think he would be? Well,
no.
a lot of Republicans wouldn't be Republicans now. Are you taking into consideration your positioning in front of the election? I've talked to a lot of people that just want to be out of the way, and it makes me think that they're going to be forced to chase the market because they have fear going into it. They just want to see, what happens here. What are you looking for, and how are you handling it?
So my positioning is always longer term. I don't do a lot of swing trading. I don't do any day trading. So I'm really looking at the next 3 to 5 year outlook, trying to get my catalysts lined up for the next year to 2 years. And I think that what we have going on right now in the markets isn't terribly affected by the presidential race at the moment. I think that the impact of what happens next week will be next year or the year after. So I'm not too worried about what the election does very short term. Can we get small industry specific sell-offs or rallies because of who wins? Sure, we all know what those trades are. If you want to play them, go ahead. I am more concerned about the fact that market breadth has started to head the wrong direction, and I'm concerned that valuations don't match up with fundamentals. We know that in the short term that doesn't always matter, but in the long term it plays out. So I'm looking for all the traders to run in a particular direction on something that I either like or don't like, so that I can make a trade. So if the short term guys bet against oil, I'll buy oil. If the short term guys run oil up, I'll sell oil. And it really is, my outlook that whoever wins doesn't change things a lot, unless there is one scenario that scares me, and that would be a red sweep. I think that could lead to a stagflationary environment. But if we get split government, I think we can wait out anything bad. And I think most of the secular trends are not disrupted. Timelines can be impacted a little bit. But in general, none of the potential outcomes, Harris with a split Congress, Trump with a split Congress, a blue wave, I actually think is probably the best. And then the red wave, I think, is probably the worst. So we'll see what happens next week, but it's not really impacting what I'm doing in a way that supersedes valuation and market breadth.
All right. So, tariffs are a tax.
Correct.
And it's not a pro-growth policy. Also was a big contributor to what happened in the 30s.
Correct.
So do those tariffs and the slowdown and non-cooperation of global trade have you concerned, and what prices are going to do because of tariffs? It's kind of archaic economics, isn't it? Just slapping tariffs on. It's 19th century stuff.
It is. And, we have to differentiate between targeted tariffs and blanket tariffs. Trump is talking about blanket tariffs, and that's just another way of saying flat tax. That's really what it is. And I was just on a tour seeing clients in 3 border states. I was in Arizona, California, and Texas, meeting with clients. And I know where the bigger money is going right now. So, I am concerned that the less sophisticated money is going to vote for tariffs, because if you vote for Trump, that's essentially what you're doing. And you're going to see that lead to stagflation, because if we put a essentially national sales tax on everything coming into the country, other countries will retaliate. And that really destroys the globalism that has led to all of our pretty good standards of living. If you're
It
on this
speeds
show,
it up. it speeds up what's already happening. I mean, the globalism, that started to fall apart under his first administration. He was the first one to bring tariffs against China to the table. So, that's what I'm worried about is tariffs. You call it national sales tax. Do you think he's going to try and eliminate um, income tax to have a national sales tax, or just add on another tax on top of income tax?
It is hard to know, but a red wave, you
Yeah,
could see income taxes substantially lowered at the top end. You could see a flat tax of 10 or 15%, and then tariffs to make up the rest. And I'll just tell you that, as a guy who makes a healthy six-figure annual income, it wouldn't really be bad for me, right? I mean, I would get a tax deduction on my income side that I wouldn't pay on the consumption side. So for me, making middle six figures, it's okay, right? So I'm in that 2-3% of the population that probably benefits from a Trump presidency. But like I said, I play poker. I have a big crowd of baseball folks that I hang out with because I used to play back when I wasn't the same shape as the ball. And folks who think that tariffs are a good idea, they're not sophisticated economically, and they're going to get what they deserve if that's what they vote for.
yeah, yes, we will. So what about the Fed? What are you thinking here? Have you ever seen the beginning of an easing cycle start the way this one did, Kirk? Where I thought that we could have had a sell the rumor, buy the fact, and yields would have bounced a little bit, but from 360 to 430 after a half a point cut on the first ease, I've never seen that before.
So people have been trying to tell me that the long end going up is indicative of a credit crisis, correct? And I think that there is a whiff of a credit crisis developing. I think it's 4, 5, 6 years out. But, the market likes to anticipate, and the market likes to have a narrative. My anticipation is that this is where we're going to see the biggest impact from the presidential election. If Trump wins, I think the long end of the curve probably goes higher because I think
duration.
Yeah, I think duration is a problem. And if Harris wins, I think we stay in this choppy range. So it really depends on the tariffs are a big deal. I mean, I don't think people understand how disruptive to the economy that could be.
Couldn't we end up with shortages as well? Besides higher prices, it also leads to shortages.
So think about COVID and how all the supply chains got disrupted and manipulated.
Yeah.
Tariffs would be worse than that.
Okay. All right. So we're going to have some scarcity issues along with higher prices. If you could find what you want, you'll pay through the butt if you could find it. And you'll go, things are rare. I can't find them. I guess I'll have to pay the price.
If President Trump wins, I'm going to start stocking up on toilet paper again fast.
Oh, the DEA made a bust during COVID.
Yeah.
And they found about 5 rolls of toilet paper hidden in 10 pounds of cocaine.
I guess that makes sense on a couple.
Yeah, you throw the coke away and you have the toilet paper. So what about the dollar? I know that Vance and both Trump are going to want to see a weaker dollar if they get in because, they want to have an export advantage. So our farmers, agriculture, and what we produce here has a tailwind rather than a headwind. Do you think they could just jawbone the dollar lower if he wins? How are they going to lower the dollar?
By breaking the economy.
Okay, got you. All right, so that confidence, people will lose complete confidence in what's happening here in the country.
Can I share a chart?
Oh yeah.
So I want to pull up my dollar chart, and I
Okay.
would just like to point out to folks that I have been mostly right on the dollar for a very long time. Do you see a dollar chart right now?
Yeah.
Okay. So
No, it's Bitcoin dollar. Bitcoin.
Okay, here's your dollar. There you go.
Okay.
So going back to 2012, when I was writing for Wall Street Journal and Market Watch, and everybody was a huge dollar bear. That's all the talk was. Jim Rickards was at his peak of talking trash about the dollar, and I picked on the gold bugs back in 2011, 12. I said that the gold would collapse, and I said the dollar would go on a long-term bull market. And that's exactly what we've gotten. Now, it's been choppy and in a range, right? It peaked here, and we talked about this, right? September 2022 on your show, I said that this was the top of the dollar. And, now we're in this choppy range. So the idea here is that the Trump administration wants to drive the dollar down. But the dollar really wants to stay range bound because our economy truly is exceptional. If you've been around the world, if you've talked to economists and business people, I have something called a Rolodex. I know that not everybody knows what that is anymore, but I have this Rolodex thing. I can pick up the phone and call lots of people because, I've got a little bit of street cred from having had that Market Watch gig. And I will tell you that unless the U.S. economy breaks, the dollar is going to stay range bound, and you can trade it between 80s and 120, but it probably is going to be really close to 100 most of the time. I'm calling it the millennial dollar. We're shifting from a boomer-led economy to a millennial-led economy, and there's not a lot of reasons for a dollar to get weaker. Now, folks who want the dollar weaker say, well, we'll be able to export more. No, not really, because the U.S. does not compete on price. We compete on technology and quality and expertise and things that other countries need at a time when they don't have it. We're going to also send out a lot of food. So a weaker dollar doesn't really help the U.S. export economy. It's an arcane argument. Frankly, it's ignorant of economics at this point. It defies the logic of what makes the U.S. economy strong. So if they look to drive the dollar down, which they didn't have a lot of success doing, right? I mean, this is the dollar during the Trump era. They didn't have a lot of success. It went down for a little while and then it rebounded. Yeah. They have to break the economy. Tariffs probably break the economy. Remember Gary Cohen? He worked for Donald Trump.
Yeah.
He quit because he was so upset with the policies. And at the same time that the first time Trumpflation was used in an article in 2017, Gary Cohen was talking about stagflation. In my mind, and I'm just going to set up a big macro scenario here. If Trump wins, and especially if he gets Congress, I think that we see a repeat of the 2019 repo market, I think on steroids. So anybody who remembers trading that in 2019, I mean, you remembered the disruptions. The Fed had to come in and bail out the repo market. Ultimately, it was the precursor and front end of a banking crisis that I think that we got lucky almost that COVID happened because it spurred all those huge bailouts. Without COVID, I don't know that Congress is awake enough to bail out the system the way that they did. So if we had just gotten a continuation of repo into a banking crisis in 2020, excuse me, without COVID stimulating massive QE forever and bailouts, we could have seen an epic banking crisis and credit crisis. Now that we are a few years into this private credit boom, what happens if interest rates are higher because of tariffs creating that scenario? How does all this private credit, which is infiltrating business, well, how does it refinance at the 5-year mark? Because they refinance every 5 years for the most part. What happens then if interest rates are higher and the economy is slower?
Yeah. I keep reading about a lot of things are closing now. Restaurant chains, retail chains. It seems like a lot of people right before the election are thrown in the towel. There's a lot of business closures. Am I just too sensitive to what I'm reading? But it feels like that to me, that things that were around are they're less around now than they used to be.
So a lot of that is demographically driven. Right now, for every 5 baby boomers that retire, we only have and this is industry specific, we only have 2 or 3 people replacing them, depending on the industry. In medicine, it's 2 people, and skilled trades, 3. In restaurants and things like that, it's closer to 2. So you have roughly half as many people coming into the workforce and being entrepreneurs or being technical people or being medical people as the boomers that are retiring. And that's really a big reason why we need to have significant immigration over the next 10 years or so. We front loaded it under Biden. There's no doubt about it. And there's certainly people that have to be kicked out. It's not a million a year. But I think a lot of what you're seeing in business closures is demographically driven. Part of my thesis on the economy has to do with climate change, but the rest of it has to do with demographics. This trip I was on, I just raised, a lot of money to build a couple of buildings, and there is a significant lack of people to fill the buildings, with businesses.
Right.
And a lot of the commercial real estate, I was looking at 6 bankrupt buildings in San Francisco. A lot of these buildings are not buildings that I want to have to deal with, because the rehab, the conversion from commercial real estate to residential and mixed use is super expensive if the plumbing is not already in the building. That's a mundane point, but if it doesn't have plumbing, it's hard to do. So, there is a lot of change coming. It's mainly demographically driven. It's partially driven from work from home. It's partially driven by a change in globalism. All these things work together. But I don't think the economy is shrinking because of pessimism. All you have to do is look at consumer buying, and you can tell that, consumers are still strong because everybody's employed. Anybody who wants to work can work right now. There's no shortage of jobs. We have 6 or 7 million jobs out there. There's a skills mismatch still that we've talked about. A smart politician would talk about, getting people trained and educated on the available jobs very cheaply, right? Because you don't want to have to spend a ton of money to get trained or educated. There's ways to fix everything that's out there, but I don't like using certain words when we talk about this, but we have problems with, if you're a Bible guy, I kind of know you are, loving your neighbors. We have a problem with that. And whether it's the neighbor down the street or the neighbor who wants to come to America. So we have a lot of things to get over. We should remember George Soros and reflexivity, right? I don't want to trigger anybody by saying Soros, because I know he's been vilified, even though he seems to have been on the right side of freedom for a long time. Reflexivity means that if we get a collapse, we'll probably see a snapback in the other direction pretty hard because they will just print, QE infinity. But do we really need to go through that process? I don't know. I don't know psychologically what we need. I just know that if we get a collapse, it'll repair itself over time. It'll repair itself much faster in the United States than anywhere else.
Yeah.
But
Well, I'll tell.
I am concerned.
All right. Well, you know what? If you're looking at real estate, Kirk, you have to check out my interview with Melody Wright. Do you know who she is?
I do not.
All right. I suggest you check it out. She was on Tuesday. You could find it
Okay.
on the site. You could find it on YouTube. What she's seeing coming with the narrative of lack of inventory, she's debunked. And what happened in Florida is only speeding up what she's looking for. So I think you'll have your pick of
Okay.
buildings next year. Wait till next year if you think there are deals now, right? So it really is,
It could be. I mentioned in an interview, I interviewed a REIT guy last year, a guy who has a REIT investment letter last
yeah,
year, and he was
yeah.
super high on Florida real estate. And I tried to
Oh,
argue that's a bad idea because I know that private equity people have been cashing out for 6 or 7 years in Florida. The private equity guys are usually the smartest guys in the room. So if they're telling you time to move out of Florida and start investing
yeah,
in the Midwest or Great Lakes states or somewhere else, you should probably at least entertain the thought that they're correct.
yeah.
I have
A
no desire to
hurricane,
buy anything in Florida, that's for sure.
the Miami hurricane in 1923 marked the top of the Florida real estate market back then. That was a real bubble back then before the crash. Okay, so anyway, she thinks it's Florida's unrecoverable because only 4% have flood insurance. So anyway, I really, it's great to catch up with you, Kirk. I hope you have a great fourth quarter for you and your investors and Shooter. And you and I will be talking next year in a brave new world. We'll see what kind of setup we have to deal with going into next year.
Right. Do we have 2 minutes to talk oil?
Yeah.
All right. So last time I talked to you, I said the oil would be range bound and then we would potentially have a spike. I think that we are at a binary moment with oil. I think that if there is a broader war in the Middle East, you get your spike.
Okay.
But I think that you want to exit during that spike because what I have witnessed in the oil patch, what I am hearing from the private equity guys, the drillers, the CEOs of a couple of big companies, you know who they are. U.S. oil supply is going to be strong through the end of the decade. OPEC oil supply is going to be strong for a long time. There is no shortage of oil developing unless we blow some of it up. Also, I know that there's a lot of pessimism about EVs right now, but EVs are going to change their very nature in the next 2 to 3 years. The first thing that's happening is that there's been massive improvements in the battery technology. It should be 30 to 50% better 3 years out. But also the extended range electric vehicle, which is very popular in China, is basically being copied. And it's kind of neat that we're copying what they're doing. Is coming from Hyundai and Ford and a number of other companies. What is an extended range EV? It is not a hybrid. Get that out of your mouth. It is an electric vehicle with a battery with about 100-mile range, but also a 2 to 3 gallon gas tank and a generator about the size of an alternator in the back of the car or somewhere in the car that recharges the battery on the fly. It ends up giving you
nice.
500 or 600 miles of range on, say, 3 gallons of gas. So suddenly you're going to have the equivalent of 150 miles per gallon range or mileage. That would cut in the United States if over a decade we adopted that that would cut our oil demand 40%, give or take.
Yeah.
So that's what's coming. The demand for oil is about to tip over. I'd say 4 or 5 years out. And the market likes to front run that. So I'm looking for an exit strategy in most of my oil investments sometime this decade. I don't want to see a war in the Middle East, but if it happens, that's my exit.
All right, here's my,
we'll see.
Yeah, I thought I'd share this with you long term, around 62. If we get down there, I'm going to take a shot. We maybe returning this week, but I actually came in long WTI because I was expecting retaliation, but I thought it might be more the military target. So I would try it again down here at 62-ish.
I think we might still get that retaliation. It makes sense if Israel is truly as hawkish as Netanyahu makes it sound. It makes sense for them to cut off Iran's finances at the knees, and that means attacking their major refinery capacity.
Yeah. And I think they'll go after their nukes.
Can you make that chart bigger and pull it back? If you can switch that to a monthly chart from a weekly, you'll see that your support is much lower.
40.
Yeah. It's much lower if you stretch it out. So, I think there's a pretty good possibility that you see the price of oil in the 50s by 2030-ish. And I am calling some of this panic pumping. You already are starting to see cheating with OPEC again, which took longer than I thought. But countries are starting to realize that there's no demand growth. I mean, and we'll get a little uptick because of the stimulus in the United States and China. But these countries know that if they don't sell their oil in the next 5 to 10 years, they might not get to sell it. Yeah. So they're going to pump. They're going to drill, baby, drill. That's what they're going to do. Okay, we don't have to, and we really can't. We don't have that much oil left to drill.
Okay. All right. Well, appreciate it, Kirk. I'll be in touch with you, get a hold of you, and we'll set up a date. Sometime late January. Another quarterly visit with Kirk Spano. And
here's one last thing. Every year on Halloween, I make a prediction for the presidential election, and I was traveling for 2 weeks, so I didn't have time to buy a mask, but I always wear a mask. Okay. Who's going to win?
All right.
The betting markets are wrong, folks. Here's your next president of the United States.
There you go. You heard it from Kirk.
Take the odds, bet on Harris. I bet on Harris in January. I got pretty good odds.
Kirk Spano Damas making his presidential prediction. Thanks. Thank you very much, Kirk. Great to see you and talk to you. And thanks for giving us your time today.
All right. You have a good one.
All right. Kirk Spano, everyone. Follow him on X at his name. And Kirk does a lot of great writing. Where could they keep in touch with you and what you're thinking?
You can find me at Seeking Alpha, or you can find me on my website at fundamentaltrends.com. There's a link on X still, and Facebook and LinkedIn. So you can find me. If you Google me, you'll find me.
Okay. One of the best poker player traders out there, Kirk Spano.
Okay. I was the 59th best over 50 player in the world for 1 year. Then they all caught me.
Anyway, yeah, you'll get him. You'll get him this year, buddy. So thank you, Kirk. And you could join the team in 11 minutes on the Morning Edge. That's a wrap. Don't just count your pips, count your blessings. And we're all going to live through this. So I'll see everyone tomorrow to TGIF to wrap it up. Adios, and thanks again, Kirk.
Take care.